Morning all, it's 14th of May, it's Tuesday. Dollar index lower initially as expected, but surprising bounce back as you can see here. So we've got trend line resistance in the dollar index at around 97.40, 97.45. We're going to have to get up through there for it to look a bit more positive. Less important resistance around 97.50, and if we get up through there, we're going to be, well, by the time we get there, we'll be around here, which will be a little bit of fib resistance, last week's highs, and only a short-term trend line. But you combine the three of those factors, and it should be quite strong resistance around 97.70, 97.75. Aussie versus the US dollar is in a bear trend, and I speculated that this might be a double bottom, but we'd have to break up above 70.20, 70.30 to confirm the buy signal. We didn't get that. Instead, we've broken to the downside, so this looks pretty negative. The bear trend continues with a break below that little base that we had. And yeah, just looking at the daily chart, obviously pretty much the same picture. So looking negative for this pair. If you're not short, you want to get short. 69.60, 69.65 looks like a good area to try, with a stop above 69.80, should we say? Yeah, that looks like a decent enough trade. New Zealand dollar negative trend, nice and simple, just holding the trend line perfectly, really. We didn't quite get to it yesterday, to be fair. We got up to 65.93 by the looks of it, so we didn't quite get to 6600, 66.10, but pressure remains to the downside, so we do want to be short this pair. Dollar weaker, yen stronger, yen continuing to benefit from that sort of safe haven status. So we're down to 109.00, and it looks like there's certainly no real support that I can find, but we are getting oversold, so just be a little careful. I would not be buying this, no way. I don't see any reason to be long, but just be aware that we're starting to get oversold, and also the fact that the S&P is testing important support levels sort of anywhere above 2800. Below 2800 the S&P is going to look negative again, but you never know, we might bounce. Euro versus US dollar is clearly in a bear trend for this year, but difficult to trade. We're seeing good bounce backs, another great bounce back this week, up to this week. Yesterday's negative candle as we peak at 112.65, so who knows, maybe this will now start to trend lower. I really don't like this pair. I'm finding it difficult to spot good opportunities, hold on to trades. We've broken above this trend line, only a small one again, 2 months old, maybe you could call it 2 months old. So in that respect, that's quite positive, but then this candle yesterday is quite negative. So yeah, it's generally a confusing picture. If you're going to stick with the trend, then you're going to be looking to short it, but the best support of the day is definitely at 12.10, 12.00. Then if we break below 111.90, that will be negative. I think that's the best I can do on that. Personally, I'll just leave it alone. Cable lower. The only hope for cable is that we hold above the 200-day moving average, which is around 129.60, 129.50. And as you see, we are hovering around there. We've had a low at 129.39, so we start breaking below 129.30. That's going to obviously put pressure on the pair. If we bounce back, we're looking at 130 sort of 10, 130.20 with the 100-day moving average and the Fibonacci resistance. So we definitely should struggle there. I think, although this has held quite well, I think this is less important resistance around 130.40, 130.40, 130.50. Canadian dollar just remains choppy and sideways, no direction, up for a day or two, and then plunge. So trying to get any meaningful levels out of this is going to be a struggle. Let's have a look. If we put this little trend line on there, then this trend line would suggest that a break above 35.00 is bullish. I don't really know what to do on the downside. Let's have a look. Maybe I could put a trend line on here. Yeah, I think we leave that. One thing I'm sure about, and I have been for a while, is gold breaking above that trend line. So we were selling into gold up to 12.89, stop above 12.92. Well, I still think that was the right decision. Buying above 12.92, buying more on a break above 12.95. So if you follow those instructions, you're doing well. You're into a gold long position and we're holding it. We should see a break up through 13.03 is minor resistance now. Up through there, and we're testing the previous Sorry, we're testing the April high at 1310. That shouldn't be too much of a problem either. When we get up through there, we're looking at 1319, 1320, and this peak up here at 1324. If you're not long, but you want to be, I'm not long enough, that's for sure. I need to buy on a dip. So I'm looking at 1296, 1292, 1291. I'd be very, very surprised if we get down as far as 1288, 1287. But you can see there's some trend lines intersecting there, providing good support. So those are your three buy levels. But I'm pretty bullish on gold, and I think we're going to continue higher. Now, silver is a different story. Silver looks quite negative still. If I hadn't looked at the gold chart, I certainly wouldn't be bullish about silver. But let me redraw some trend lines here and see where we're going with this. Oops. I do say it's good to leave trend lines on because you never know when they come back into play, but that was just getting messy. Okay, so silver has resistance around 1485, 1490. Now, a break up through there, break up through 1495. What's this high up here? 1496, 1497. That's going to be bullish. And when you look at gold, you have to think, that might well happen. Yesterday, this is quite a bullish candle. You can see the buyers came in down in around 1460 and pushed the price right back up to where we started. So that certainly indicates the presence of buyers. But I wouldn't get bullish until we get up through 1497, which is the May high at the moment. If you are keen to buy into silver because you do believe the gold story, you do believe the gold's going to rocket and therefore silver will follow. Looking at the short-term chart, a push up through 1480 would give us a little, well, on the hourly chart anyway, that's where the 100-hour moving average is. I'm not sure that that's particularly relevant. The green 500-hour moving average is a little bit more relevant. As you can see, it has held the peaks over the last 6 weeks. It did hold in April it was tested twice, and again in May. So in theory, a push up through 1488 would be our first little buy signal in the short term. I could make an argument for an inverse head and shoulders here. Left shoulder, head, right shoulder a little bit deeper than left shoulder, but that certainly doesn't matter. So again, a break above 1490 would complete what I think you can argue is an inverse head and shoulders pattern, and that would be a buy signal too. I mean, I'm looking for reasons to buy silver purely because gold looks so good, and I know silver would have to in some way follow gold higher. It's a loose relationship, but anyway, there you go. Right, stock markets is where all the fun and games are. So yesterday the S&P topped out around this resistance level around 2868. We have had that as a while as a level. So, and we plunged a lot, 67 points. So that's just over 2%. To test what is the only decent support level, really, around 2810. Now we've overrun just a fraction to 28. Where are we? 2802. Yeah, no, 2800 we've been to. So we're going to have to get above 2810 quite quickly for the bulls to engineer another decent bounce back. That doesn't look like it's happening yet. We start getting below 2800, that's going to be more negative, and we're going to be looking at 2780, 2775, maybe 2765, 2760. On the hourly chart, we've got this little trend line here around 2808, so that kind of ties in with the need for the price to be above 2810 for bulls to engineer a bounce back. We've got the first fib level at 2835, 2840. If we get higher, by the time we get to 2860, well, the 100-hour moving average might actually be below 2860 by the time we get there. But this little trend line, the upper trend line, certainly will be meeting us. So that's going to be an important resistance level. We'll then need a break above 2870 if the bulls are going to take proper control of this. I would certainly be selling in the 2860 area to see if the bear trend remains intact. Nasdaq's broken its fib support levels, and we're now looking at testing these little lows down here where we've got 72, 76. So we're not far off. We've been down to 72.90. This chart looks less likely to bounce, I have to say. We're heading into oversold territory, as you see down there on the slow stochastic, but nowhere near oversold enough for it to be desperate, for it to be likely to trigger some sort of short squeeze. The only hope I can see for bulls, I'm staring at the 4-hour chart over my shoulder, and I can see the 500 period moving average coming in at 72.70. So if you're looking for well, the only support level of the day really is around 72.70. First resistance is around 73.75, 73.80. If we get up there, up through there, we could get as far as 74.25.30. You can see last week's low is at 74.35. So if you're short, you'd want to stop above 74.40, I would suggest, and then look for 74.80, 75. Yeah, by the time we get to 75.10, 75.20, then we'll have the 100-hour moving average, the upper trend line, and a fib resistance level. So that would be a great sell level. We're a long way from that. We're 200 points away from that. So we'd need one heck of a recovery to get there, but just to make you aware. Dow Jones, we've got some support. Well, we had some support in theory around 25,400, 25,300. Now, as you can see, we're hovering below there. So that is not good for bulls. They're going to need to get the price at least above 25,300 to be back in the game today. And of course, the bigger resistance here is at 25,400, 25,450, which works so well as a support level on the way down and is not and was broken yesterday. I've got to say, I would be leaning to the downside on the Dow Jones looking at this chart. Anything on the weekly chart? No, not really. We've got a bit of a fib support around here at 25,230. So where have we been to? 25,215. Okay, possible that will hold. And when you look at these little lows down here around 25, no, again around the 25.20, 25.10 area, that's the March low. Okay, there is a little hope for bulls if they can hold that level. Clearly, a break below 25,200 is going to wipe that out. So bulls have their work set out for them there. They must hold the price above 25,200 if they're going to stay in this game. Get back up through 25,300, and then the big challenge of the day, up to 25,450, 460 will be the main resistance. I'm regularly asked by my subscribers and my social media followers which is the best charting platform to use, or which one do I use in my videos, my daily technical analysis and trade ideas videos. So I just want to let you know that Metastock is something I've used for as many years as I can remember now. I've tried so many different charting platforms over the 15 years or so that I've been doing technical analysis. And Metastock is by far the best. The quality of the data, you've got to have a platform where you draw trend lines on different time periods, for example, and they all line up. So I've had some platforms where you put a trend line on a weekly chart, you get completely different values than you do on a daily chart, for example. You can't have that. You've got to have something that's absolutely top notch, so that you can trust the data. So without doubt, this is the number one. If you're interested in a free trial, you can just go to metastock.com/day trade ideas. That'll get you a free trial. If you have decided you want to sign up and give it a go for 3 months, you can get 3 months for the price of 1, which is obviously a phenomenal deal. So just go to metastock.com/offer/trial/3 for 1.